Whiskey 9, 7 November, interrogative Alpha Bravo. Negative Alpha Bravo. And this is 7 November Golf. Roger, request you check your Romeo side. I'll go ahead and check my Tango side. 7 November Golf out. 7 November 8 and 8 class, 7 November, say again. 7 November, go. Roger, I copied a while ago, 1 Charlie transmission that my can use and 8 5, this is 7 November, Charlie. 8 5, right. Now 1 Charlie, 7 November, go.
This is 1 Charlie, in reference to your last, you're Brandon 158, extra 5 o'clock, 1200 between teams, and local. Also request 3 units take extra message to see if we can try to get Whiskey 9 and 8 for pause at the playground.
And this is 7 November, Roger, stand by.
Got that.
Got it? All right. And all units, this is 7 November Golf. My unit Alpha, Echo, X-ray Alpha, Alpha in there. One Charlie, Alpha Bravo.
Hey, I never took a dip.
Whiskey 9, 7 November, interrogative Alpha Bravo. Whiskey 9, Yankee, 7 November Golf, over. This is Whiskey 9, go. Whiskey 9, 7 November, interrogative Alpha Bravo. Whiskey 9, Yankee, 7 November Golf, over. This is Whiskey 9, go. Whiskey 9, 7 November, interrogative Alpha Bravo. Negative Alpha Bravo. And this is 7 November Golf. Roger, request you check your Romeo side. I'll go ahead and check my Tango side. 7 November Golf out. 7 November 8 and 8 class, 7 November, say again. 7 November, go.
All right, welcome to another live stream. We have Jason over there, wherever he's located at, and David Piatek is with me in Civ Div's house. I live in Northern Virginia. So many huge things happened today, Jason. On the VA disability side of the house, I want to talk about or mention that first, and then we'll get into the Fed rates. The House committee met today, talked about quality of CMP exams, which was absolutely insane. The bill in the House passed. Now it's up to the Senate when it comes to VA disability payments. And today, I'm going to let David take it and talk about the Fed drop. To be honest with you, David, I have no idea what that means as a veteran. Can you explain why does that matter to me at a baseline understanding for the viewer and selfishly for myself? And then we can kind of kick the conversation off from there.
Yeah, so the Fed met today and they dropped the Fed funds rate today by 0.5%. Now, this decrease has a couple of factors tied into it. Now, originally, we thought that they're going to drop about 1/4. And I think it's a surprise that they dropped it by 1/2. The irony of the situation, too, for a lot of people from the lending or for the mortgage side, we're waiting for this meeting so they can get even, let's say, lower rates than what's the current market. The irony of the situation is that mortgage rates actually ticked up a smidgen bit today. And I'll show you guys a little bit about that because there's a lot of factors that go into interest rates, like the inflation, the cost of borrowing, the bond yields, and risk, right? And anyone's personal financial situation, their such as their down payment, income, assets, and credit history, have a big play into how those rates are factored in. And I'll show you guys here in a little bit, kind of like where you can go to check where market rates are, because the Fed funds rate also is the rate that banks borrow money from each other. So if that cost goes down, then they technically could borrow money at a cheaper price to the consumer because they're getting it at a lower price. Do they always pass it down? That's kind of the question. And right now, what we've seen too is that interest rates, or the market itself has been predicting they're going to drop rates. So lending institutions have already been baking in those reductions into the market rates, right? So if you look at, which we'll look in a little bit, at the 10-year Treasury bond, because that's primarily what lenders look to when assessing those rates, right? Based on the mortgage-backed securities, the 10-year Treasury note. So you'll see that if you look at today, if you go to your search engine, type in 10-year Treasury note, you're going to see a slight uptick at the end of the day.
Now, Dave, I want to jump in because I think that you're hitting on something really important here, and it's the borrower's perception of what's happening versus the reality, right? So when the Fed drops the rate, and it's great news for the mortgage industry as a whole. Right. There's a lot, like you said, a lot of different indicators. Obviously the Fed Reserve's moves is a big piece. Even their words impact where rates go before the meetings. All the different economic indicators, like you talked about, the bond market conditions, stock indexes, energy prices, gold prices, you name it, all go into why mortgage rates do this every single day. Mortgage rates are not fixed. They don't stay the same for months and months at a time and then move. They're changing a little bit every day, and there'll be that stair-step trend. My question for you, and I think that this is really important for people to understand. Yes, and you can confirm this, and then I have a question. Yes, mortgage rates have been trending down because of the anticipation of the Fed reducing. However, the Fed reduced further, which is actually a great indicator, but these other things kind of masked that a little bit. What does, this is the question, and I can't wait to ask it. What does the Fed's rate actually directly impact? Like today, what is it actually changing for people that own homes with loans?
Nothing. If you already, let's say in a way, if you already own a home right now, right, and you've been waiting to refinance, this could be that opportunity, right? Because the markets have been trending down, and we really don't see them, from the research I've done, actually going down even further. So right now they're set to pretty much steady out where they're currently at.
All right. So how about home equity lines? Let me be more specific.
Okay, gotcha. So from a home equity line perspective, then those rates can be adjusted downwards by up to 0.5%. So HELOCs, that's a good option. So to be able to then, so if you actually have a current HELOC, then that rate that you currently have can drop, right? So because based on the margins. So another huge.
There you go.
People that have.
Yeah. Huge. I mean, 0.5%. You talk about overnight, right. If you have a home equity line or you've been thinking about a home equity line, those rates just effectively dropped 0.5% from the Fed's move, which is tremendous. I mean, 0.5% is a big deal. It's been how many years since the Fed cut the rate? And on average, what would you say is the average rate cut that we typically see?
About a quarter, and it's been over 2.5 years since they did a drop. So it's positive news overall, because when you're going to be lending money like for credit cards, those rates are going to be dropping. So overall, it's going to have a huge impact for people but also there's a lot of 0% interest credit cards out there. So definitely, if you're carrying debt on credit for whatever your financial picture is, definitely look into some of those options so you can reduce that overall carry cost. And instead of just paying interest, focus on paying down your debt.
Yeah, good move. It's all about interest rate, right? So debt's debt. There is sometimes, I think, this weird situation where you have the interest rate write-off, right? So you can write off the interest. And so sometimes that might come into effect if you're looking to do a cash out refinance. Maybe you're absorbing a little bit of debt that has maybe a little bit of a lower interest rate, or if you don't think that you're going to be able to pay off that 0% within that
Right.
introductory term of 1 year or 16 or 18 months or whatever. I do want to point out that you guys look really good sitting next to each other. If you could just scoot a little bit closer for the camera, that would be great.
Let's see. Maybe we
Yeah.
gotta stagger this.
Oh,
we're
I
both
just- I
military.
love
We
it.
can get comfortable.
Yeah, you're fine.
I just wanted to see if you guys would move. That's so awesome. We do it for the
Can
people.
we make this specific to when you talk about a HELOC, which is a home equity line of credit, right? Can you make that specific to veterans, specifically with compensation? Like, why would a veteran who receives compensation, because I think that group of people are in their own class to begin with. Why would a veteran who receives compensation even consider a HELOC to begin with? Now it's more advantageous, as I understand, it's more advantageous now with the drop. But why would a veteran with compensation even think about a HELOC instead of just go about their loan?
Yeah, actually, so let's explain what a HELOC is first. So it's a home equity line of credit. So think of it, your home, like getting a credit card on your property, right? So let's say, for example, you get $100,000 line of credit. It's not typically amortized over a 30-year period where the first 10 years are interest only, and it's also your draw period. So if you need to write a check for $5,000 or $25,000 in order to put a new roof on your property, you have access to that money, and you start paying interest immediately upon drawing that money. Now you can pay that balance down, or you can keep increasing it. And at some point, it's going to turn into a fully amortized mortgage, right? So during that draw period, this has a direct impact for veterans because you're having to pay lower interest on that mortgage.
All right. And to the viewers, if you have a question on VA home loans or home loans in general, now's the time to ask. I'm just going to go ahead and pull one up with this, Jason, unless you have anything to add to that. But it's that time. Thank you for being a member. I have no idea whose channel you're a member of. Could be multiple. Could be, CivDiv, Veterans Info Tap. Who knows? But he says, so what's the new interest rate on VA new purchase loan?
Okay. Can you drop on that the
share screen?
Share screen.
Okay.
Yep, let's take a look at that. Okay. So this is what's important to understand is that interest rates are going to be based on your personal financial position. Okay. So on here, it shows what the average interest rate on a VA home loan is. Okay. I see up here. Right. So this is from Mortgage News Daily. So here they're indicating that average rates across for their how they get their data is about 5.72%, right? And obviously there's a lot of factors that go into it, like, and this is for educational purposes only, right? The if there's discount points, origination fees that are associated with it. It's same thing with some of these other indexes that are out there. Like Freddie Mac has their PMMS index, which is the primary mortgage market survey, which will also kind of average out what that rate is. And they do publish it every Thursday. So tomorrow they're going to publish it, but it's too quick for them to be able to reflect what has changed, right? Really, we're going to be able to see what that is next week. But see, again, what it shows on here is that mortgage rates ticked up just a tiny, tiny bit, which I don't even know if this is going to have a direct impact for veterans borrowing as far as like the 30-year mortgage. But this is just like a good indicator that we go to kind of see what's the market doing. And again, this is kind of a cumulative of what lending institutions are offering veterans.
David, I have a question for you, and I'm not sure if you have the answer. Back in the day, right, when I did mortgages, rates typically would change every morning. You would get a notification, this is what the rates are in the morning. Well, the Fed doesn't meet in the morning, right? I mean, they do, but it's after the rate change has already taken effect. In some cases, depending on the economic data that's coming out or different meetings and so forth, every once in a while, you'd get an afternoon rate change. Yep. Do you know? I wasn't paying attention. And I don't know if you're privy. Do you know if there was an afternoon rate change? And if not, then we might be looking at a potential adjustment tomorrow, if you will.
Yeah, I think tomorrow is where we're going to see the adjustment, just because they did it so late. Now, I'll tell you this is that when conditions are degrading, this is kind of like a back end piece. Sometimes people will try to rush to lock an interest rate because they're seeing that rates are going up, and lenders, and I've seen this before, will suspend locking, that they won't let you lock because they're waiting for the rates to adjust, especially if there's something major. Yeah, because I mean, the bond markets change every second, and they'll do periodic updates to the rate as significant events happen. So I didn't really see anything on my end warrant a change. I think tomorrow we're going to see the biggest impact, and then kind of moving forward from there.
Right. You know, one of the things that you mentioned, Dave, and then I'll let Clay jump into finding some more questions, is the impacts to all, and I know it's not mortgage specific, but the impacts to all short-term lending. And so there's some really good things that are happening for borrowing money, right? And then for the savings side, it's kind of the opposite, right? It's this weird teeter-totter seesaw thing going on.
Right.
One thing gets better, the other gets worse, and back and forth. So I'm glad that you mentioned it, because folks, you know, we're here to help people, right? And if people aren't aware that this happened, they might not know to check to see if you could refinance that car or whatever else you're trying to do. It could be a good time to do that. So we'll bounce it back over to Clay to jump into some more questions.
Oh yeah, this one seems to be a bit specific, David. So says Clay asked the question, please. I'm just going to read it.
Thank you.
It's this person asking the question. Veteran purchasing one family home at $500,000, no money down, VA home loan. What's the interest rate looking like in this market with a 700 credit score? Is that something that you can even drive up right now, or is it?
No, because like I would say refer back to what we talked about, what the average rate is when we looked at Mortgage News Daily to kind of see that's kind of where the average would be.
So it would be around five. I mean,
I would say relying on that, because again, if we go right into specifics, requires really disclaimers, and then again, we don't know like 100% like of the financial picture.
So then the question here, David, is if somebody reaches out to you to get pre-qualified to get an idea of what they could potentially qualify for, how much does that cost them?
Well, so there's no
nothing, right? Nothing for a pre-approval.
Right.
Zero. Free.
Yeah,
sorry,
so
throwing words in your mouth. I'm making you make it free. It's free for everybody watching.
Well, there's no application fee, because I actually, ironically do get that question a lot. Like, how much does it cost to apply for a home loan? There is no upfront cost for you to be able to apply and at least see where you're at. Because 30 to 40% of veterans disqualify themselves, and we talked about this before. And only about 13% of veterans use the VA home loan, which I think is ridiculous because of how big the benefit is for the veteran community to be able to utilize and leverage, and it's a life benefit. So I think a lot of people that purchase properties in the last two years or so are going to be able to benefit from where rates are today, right? By doing interest rate reduction, refinance loans. Jason, you made a good point, right? Car notes, you can refinance. Just be really careful when you look into that, and also interest rate, your credit card rates to drop a little bit, which is all positive. But like you mentioned too, like your savings accounts are not going to have the same returns unless you're locked into those for a long period of time.
Right. I would love for you to touch on the refinance thing. So we have two groups of people, right? You have folks that are looking to potentially buy a house, and in my opinion, don't wait for rates to try to drop down to, historic lows, right?
Right.
By the time that happens, house values are going to potentially be in another direction, and you got all kinds of things going on. So you have people looking to purchase homes. Awesome. Get pre-approved with David and make sure what you can actually qualify for. And I'll tell you that if you have a spouse, it's really important to get pre-approved first, so you know what dollar figure you're working with, instead of looking up here and then the reality is here and then nothing is liked. Just to throw that out there. Yeah. So purchase, get pre-approved, refinance. It might be the time. If you purchased within the last couple years, you could potentially be there, and it's just good to get a pulse on things. Talk to us a little bit, David, about the EARL, the acronym, what it stands for, and how that process works for folks.
Yeah, so if it's called an interest rate reduction refinance loan, it's probably one of the best streamlined refinance programs that exist, right? if you have a VA home loan, you've made 6 payments, and after the 210th day of your first payment, you can refinance or close on an interest rate reduction refinance loan. The cool part is that you just need an ability, source of income. So even if you had $1 million house and all you showed was you have a 10% disability rating, you could refi you have to meet other criteria, like a 0.5% lower interest rate, closing costs need to be recouped within 36 months, a couple other things that factor into that. But yes, it's a phenomenal program to be able to utilize. And you're not limited to only doing it once, because a lot of times people are like, well, I'm waiting. And sometimes waiting, you could have an economic shift. All of a sudden rates go up. You miss that opportunity. So it's technically every 6 payments plus 210 days. So the 7th month, technically. Just be careful when you do that, so you're just not stripping all the equity out of your property, because a lot of times people tell you it's free. Nothing's free in life. They roll the closing costs into the mortgage, so your balance goes up. But again, everyone's financial situation is different. A lot of times you could kind of figure out a way to defer some payments, so you can apply those payments towards your principal and reduce the balance to kind of get back to where you are. So there's definitely some strategies around that. And the interest rate reduction refinance loan is the only VA home loan product, to my knowledge, that you can do a investment property or second home refinance. So
amazing.
So 2 years ago, rates have shifted. You have a higher rate. It's an investment property. You can refinance it with an interest rate reduction refinance loan. And
that's awesome.
Yeah, if you have a VA disability of 10% or more, you don't pay the funding fee. So even if you bought originally, had to pay the VA funding fee. Now you're looking at doing the interest rate reduction refinance loan. You won't pay that fee this time around. And if you follow those channels, you should have at least filed for some disability, right? It makes sense. But let's say you don't, you're not exempt, but you filed your intent. Let's say a couple weeks ago, you close on a home this week. They pay the VA funding fee. 2 years out, you get your decision rating, and it's backdated to before you bought. You have the chance to get your VA funding fee refunded back to you. And they do just really send you a check in the mail to say, hey, thank you for your service. Here's your check back. And then you can apply it towards principal or do whatever you want with it. So there's a ton of benefits.
Like pay down debt, because
well, we're going to do a lot more, like, I think, financial classes for the veteran community around managing money. Like, what do you do with the money that you get from disability? I've seen people go out and buy $50,000 sports cars. Maybe that's not the right answer when you get your first check, right? Yeah.
Is there a price to happiness, Dave? Really?
Well, there is. Well,
it's
you're going to be sad.
37 is the price.
Yeah. So you have to, but at the same side, I see veterans that get awarded 100% disability ratings and do some stuff with the VA, and you go from being homeless to being a homeowner. It is unreal to see that transformation. They get back pay. They manage their money well. They have decent credit. Like you could set yourself up for a good position, especially if you get the property tax waivers. Like that's a game changer for veterans all in itself.
Talking on that, we do have a donation real quick. I want to get to it before it runs out. So Secret Sauce, thank you very much. I don't know on whose channel that is for, but we definitely appreciate you. Secret Sauce says just went from 90 to 100% PNT yesterday. Congrats to you.
Awesome.
I hope Jason and myself, we're a part of that journey for you. Still in shock. Okay. You should be. That's great news. Huge thanks to you and this channel. He's probably talking about me, Jason. I'm just joking. I'm just joking. Does being PNT change anything with VA home loans? So specific to being 100% PNT, is there a extra added benefit outside of everything else?
Well, obviously the compensation itself is a huge game changer, going from 90 to 100. Not only is it that 37, right? And plus, if you have dependents, you can also gross that income up to qualify for even more. The other big benefit is, like I mentioned a little bit earlier, it's the property tax benefits that go with it. Now, you definitely need to search the county and the state's requirements, because the state may have a rule, county may have an overlay, and all of a sudden you're not eligible for it. So what you really have to look out for, is what's the requirement, which typically it's 100% permanent in total. You have to live in the property. So you can't have like 10 homes and be like, I'm not paying taxes on any of these. So just kind of be very aware of that. And then the other times they might have some restrictions around how much income you make. Now, remember recently, I know, Jason, you did a video on the HUD-VASH program, which is actually another tool for veterans to save money because depending on the qualifications, you might be able to get that HUD-VASH money to help pay with rent and put money aside for closing costs or pay for doing some repairs on a property that you plan on purchasing. So, definitely leverage those things while you're going through that process because there's just so many benefits to being 100% PNT. I don't even know them all.
Hey, Clay, I'm going to let you get to more questions. I do have one that I happen to see. I'm going to throw that out there, and then you could pick out another great one. So when it comes to the VA funding fee, which can cost thousands of dollars for folks, I mean, it is probably the biggest single fee that's itemized, right? So is the VA funding fee, and this is by OJ Wild, is the VA funding fee waived even with a 0% service connection?
Great question. It has to be a 10% or higher rating for the VA to waive the VA funding fee. The only time there's a caveat to this is that if you've never looked at your certificate of eligibility, I highly encourage you to do so. It is very simple to do. You go to the va.gov and you can go to their home section and request a certificate of eligibility. You can also schedule a call with me and I'll pull it for you. Most of the time they come back automatically, but on there will also state how much you're getting. So definitely double check that, especially if you've had a home before and you sold it. You want to make sure that you have your full certificate of eligibility. And then
to you, Clay.
Yeah.
All right. So going to JK, the banks might have already baked in a quarter point, definitely not a 50 basis point reduction. We should see lower rates if banks were not corrupt, but they are. Can you explain that to me like I'm 5?
Listen, every lending institution is different, right? And rates, if you think of it this way, every bank functions differently and they have different costs, right? And this is something I've been saying for a long time. If you being marketed too heavily, if you're getting solicited constantly on different social media platforms,
say it ain't so.
Is that free? Do you guys know if that costs money or is it free? Right? It costs people millions of dollars. Yeah. I'm assuming millions a month just on advertising to you. So that cost has to get passed down somehow, right, to that. And yeah, I mean, I'll leave it at that.
Tell me it's not so, Dave.
Yeah.
Who's paying for it?
Yeah, we're talking about VA home loans right now. Certainly not claims consulting companies, right? Certainly, we would never talk about targeted ads.
No,
and buying.
Oh yeah, no. You mean like the mailers that I get?
Yeah,
like those.
Oh. You know what? Let me touch on one thing with this subject that a lot of people, when you get a credit inquiry, your phone blows up. Do you know why? Because the credit bureaus sell or like the data companies see that you had a credit inquiry. So what they do, because I used to purchase these a long time ago. And so basically they can see, no, it's not me, but you can see someone's email address, phone number, first name, last name, average assets, average income, credit score, all of that stuff. So before they call you, they already have a lot of your information and they're just basically putting it in a dialer and reaching out to you. So no joke. Like if I'm on the phone with someone and we're looking at we just click order credit, they're like, I'm getting this weird phone call all of a sudden. And it's like 20 to 30 phone calls. It's crazy. So what you can do to avoid getting spammed like crazy is go to donotcall.gov and opt out prescreen.com. So do not call.gov. You register with the government. They take you off the list. The opt out prescreen is with like TransUnion, Experian, and Equifax. You can opt out of getting like tons of mailers and stuff like that. So it just saves you time. And especially with, if you may suffer from some stress in your life, this can add to that. So it's just a great tool.
All right, and we have Jeffrey Munson here. Going back to square one, how about first-time home buyers? And I assume it's talking about the 0.5 point reduction. So how does that affect first-time home buyers really quick?
So right now, it's basically you're walking into a lower rate environment that we were in the last 2 years, right? Which gives you opportunity to become a homeowner because the cost of lending is a lot less. You couple that with going into the fall and winter market where typically it's a little bit slower because we don't see as much activity. Yes, you have a little bit less inventory, but in theory, it can there should be less competition. Now, every market's different, right? If you're in like Florida, it's probably picking up right now because people are like, we're getting out of the cold, we're going somewhere warm. But across the rest of the country, it's gonna definitely have a factor into that. And like I bought in December, which is like the best time to buy for me, because if you're selling in December, there's got to be a good reason that you're selling. So you come across a lot of opportunities, and it's the best time really I've seen to get seller credits, to pay for closing costs, huge benefits.
Yeah, you know what? I concur, Dave. I absolutely concur with you, David, on that. The winter months are absolutely historically, right, the best kind of buyers opportunities, because sellers typically are making moves because they have to. They got a new job, they can't afford it. Something is going on with their life to do that. You know, especially when there's children involved that are in school, they're pulling them out of school. You know, the worst times are when the summer months when everything is already, already kind of unplugging. You can take the school, you could trade the schools and do all that stuff in the right time frame. One of my questions here in this aspect is when it comes to a lower rate, right? And this kind of goes back to that question. How much does the rate impact? And you alluded to it. I just think that a little more would be good. What is the effect on purchasing power? So just around that aspect.
Well, I mean, I wish we could have like throw up a calculator and kind of show you guys kind of what it looks like. But I mean, you can play around with it by, even if you just search in any search tool like mortgage calculator and just put in, let's say if you're looking at $400,000 price points, and you put in actually we're gonna do it right now. So you can let's do it, a mortgage rate calculator, and then we'll kind of show you guys to see that difference in how rates impact you to be able to purchase a property. Now remember, this is something for you guys personally to be able to take a look at. We're just kind of throwing some ballpark numbers out there.
And this is sweet. This is, just so folks know, this is awesome. And if you don't know how to do this, I believe what's happening, and I'm just taking a guess because I'm not sitting with them in that same room, but I'm guessing here that they're actually pulling up the mortgage calculator, which you can find online, and they're going to actually calculate the difference in, let's say, 0.5% difference in a theoretical world to give you a price point difference in your purchasing power. Now, couple that with the fact that we're in the not greatest time for a seller to sell,
right?
Which means now you're going to be able to potentially purchase more home for your dollar.
Right. Yeah. All right. So we're displaying we just went to Google, typed in a thing. So again, educational purposes only, so you can play with how numbers affect you. I think the average price point across the country is 410. Obviously, people are looking below and underneath that. So you can kind of see 410, and then you can play around with what the interest rate is. So let's just say we looked at what that bank rate showed, right? So at 5.7 or 5.72, your payment's going to be $23.85. But if they were like, let's say from a couple months ago, where the rates are going to be around 7, oh no, seems high, right? 7%, it was 27. So you save a couple $100 a month, right? That's what we're talking about when we're saying you have more buying power, because you're able to purchase a property either at a similar price point but pay less, or you can go for a higher price point property and pay the same, right? So that's the power of the rates shifting. And again, when it comes to buying, you really need to know your financial picture, because when you're purchasing a property, you're basically purchasing it if you can afford the property where we are today, right? Because again, we've talked about this before, is that if you're waiting I'm waiting, and Clay is waiting for rates to drop, and rates drop. We're all getting in at the same time. That market competition drives up the price and then negates any savings that you have, right? Historically, we see this like clockwork happen.
Yeah. Move quick, right?
Yeah.
Clay, any more good questions?
Oh, we got
Yeah,
lots.
I mean, we have a
lots.
lot. I have a few starred here. I'm not going in any order. I'm just randomly picking. Here we have Cheddar Roman. I love that name. I don't know
That is
why.
great.
They say, tell us the difference between standard and jumbo VA loans. I don't even know what a jumbo VA loan is.
So
It's big,
like
Clay.
a big piece
It's
of
big.
it's
shrimp,
big. Yes.
right?
It's
I
big.
like the big shrimp. Who doesn't like the big shrimp?
Yeah.
All right. So this is technical. All right. So a general VA home loan is going to be considered what the average Fannie Mae single family loan limit is, right? So this is specifically for VA loans coupled with the single family loan limit. So across the country, it's $766,550. So a penny over that for the loan size, right after down payment, would then kick it up into this VA jumbo space. And even if you're in a county that has the limit, like in Virginia, let's say where it's $1,149,825, it's still anything over that $766,550. Lenders will have restrictions on these jumbo products more than they would on a standard product, on a standard VA loan. That's where we start seeing a lot of overlays because the VA is very broad in what they allow. They'll almost allow anyone to get a loan. Which is great, right? But at the same time, right? But at the same time, lenders are looking at the veteran's ability to repay that mortgage, right? So they might say, well, if you have X credit, you can't go over X amount in loan amount, right? So they have things in place to be able to either protect themselves in it. But like when we look at it, if you're in a good position, we really don't see that much difference, I would say, in what the rates are, where they used to be widely different, right? When you would look at them and you would see like $1 million mortgage compared to a standard mortgage, standard VA loan compared to a jumbo, we would see large spreads. We don't really see that as much anymore, just because I think over time people have gotten really comfortable with VA home loans, and they are just a powerful tool. And then also couple that with the foreclosure rates on VA loans are extremely low, and the VA is really good. From my experience talking with people, has been really good at helping veterans to be able to stand on their feet, even though they come through hard times with the VA home loan program, because the VA loan regional loan centers get involved.
All right, so we have two donations. One from Platoon Daddy. In the name winning contest, you're number one right now.
I think I know you.
Bought July 2024, Southwest Missouri at 6-7 happy. Awesome. Congrats to you. And then we have another donation for Just Me, former active duty Marine here. Just wanted to say Semper Fi.
Awesome.
What's up, big dog?
Semper Fi.
I have a personal question. Okay, I know we just answered Cheddar Roman. Sorry, Roman, you're down on the name list here. When it comes to education benefits, David, like GI Bill, VRE, are those equated the same, or accounted for the same as VA disability, because they are not long term, right? They're just for the semester or 2.5 years, whatever schooling you got. Is that a number you're able to factor into what someone can afford? And I'm using afford with quotes because if you're using that to afford something, it's probably a bad idea.
Yeah, so that's a good question. So when it comes to your school benefits, those cannot count towards qualifying for a VA home loan or any type of loan, actually. What you can do is if you put that money aside towards reserves or towards closing costs, then yes, you can use that money in that sense for those purposes. But from a qualification purpose, you won't be able to use it. And I'm sure someone will be like, well, technically there is one. There is technically one, but that's only if you are on active duty. And on active duty, they send you to school. You ever see those programs?
Yes.
Then that's the only case for people out there that may know that. Is
that like the same as the housing allowance though, or?
Yeah, it's because they give you the housing allowance, right? Because if you're at if you do it at the GI level, they give you what, E5 without dependent pay?
Yes.
Yeah. So
something like that.
Something like that. Yeah. So if you did it based on like being on active duty, then yeah, you're going to be able to use all your benefits. Yeah.
I got a quick question for you, Dave, before Clay jumps into another one.
Yeah.
Can you explain the different types of first mortgage options as far as rates, adjustable, fixed 30, fixed 20, fixed 15, or whatever you have available? Can you just give a brief kind of menu of the different types of rates that are available?
Oh, you mean type of programs, like type of
Yeah,
terms
program.
that you can get.
Loan terms. Yeah.
Yeah. So there's a variety of options that you have, right? You can do a 30-year mortgage, 15-year mortgage. You could do, obviously those are on fixed, right? You can also do adjustable rate mortgages, but we really haven't seen adjustable rates as far as like what I've seen. Okay, be that competitive when it's better normally to get a 30-year fix. I would say if you're going into it, get a 30. They do have an option. It's called a 3-2-1 buy down. I don't know if you guys have heard of those before, but basically, like let's say the going rate, for example, is 6%. The first year it would be 3%, then it'd be 4, 5, and then 6%. The downside to that is somebody's got to pay for that interest difference, right? So in a market where it's not hot, it may be a slower market, then sellers may be willing to pay for that upfront to be able to cover that. But that is an option with a 30-year fixed as well. But that's why we always say, because they used to have, I don't know, JC, you remember, you pick a pay option. You had like all types of loans. You had a 1%. You had
4 options with the reverse amortization.
Yeah, like you can actually pay negative equity and just have the balance of your mortgage keeps going up. So that's all gone now. I did like those because for some people they make sense, right? If you're self-employed, but people just abuse the mortgage market like severely. And this is why they came up with all these restrictions. So I can't even tell you the last time that I did an adjustable rate mortgage for somebody. It's always been put me in a 30-year. Now, sometimes people will look at, should I do a 15-year or should I do a 30-year mortgage? And I'll tell you something. If you get a 30-year mortgage and you make 15-year mortgage payments as an additional principal reduction, you end up paying off in the same amount of time. But a 15-year, you can't make a 30-year payment, right? So those are things to consider. Now, when we looked at that chart, typically, like we looked at the Mortgage News Daily, you'll see that, maybe the 15-year will have a little bit slighter rate advantage. But again, that's all in your strategy. If you make extra payments, you can change that effective rate. You can pay off your mortgage faster and save a ton of money.
Heck yeah. Clay,
so
got more for us?
I do. We have another donation from OJ Wild. It says, Clay, Jay, and David, you rock. That's all three of us.
That's
here.
all three.
All right. Thanks for looking out. Hey, thank you, OJ. We definitely appreciate that. And getting to a question here. Let's look at Shadow Man first. Says, hello all. What's up, big dog? I have a 2.65% via home loan. I'm pretty sure that's amazing.
That is amazing.
I would love to use this HELOC to install a new roof in the future, 10 plus years from now. Should I wait, or because this drop, I should go for it? What is your advice?
Okay. So if you're looking to do it in the future, remember they're meeting every quarter. I mean, they're meeting 8 times a year. So that's going to continuously change. And if you're looking 10 years out from now, your HELOC will be closed in 10 years because normally it's like a 10-year lifespan. And you also don't want to be in a position, and this is kind of like my own personal advice, is that when you don't need money, it seems like people want to give you money. And when you need money, nobody wants to give you money. So having a HELOC in your back pocket and not drawing against it, you may have to pay like an annual fee or whatever, but if it's in your back pocket, you always have it. If you need the money, you can execute on getting it instead of then trying to figure out like, I'm not working. How am I going to be able to make ends meet? We had a family emergency. How do I get access to money? Because again, when you don't have money, people want to give it to you. When you need money, they don't.
Right. And I'll give this from the layman's perspective, so there's no worries for you saying anything. When it comes to a home equity line, yes, absolutely. 99% of them, it's a 10-year draw period, right? So you can use it like a credit card back and forth. And then after that, it turns into a fixed or not really fixed. The interest rate still moves, but it's a principal and interest payment at that point. The first 10 years, it's typically interest only payments that you're required to make. But now it closes it out. You cannot draw out any more money. It's going to force you to pay it off typically in the next 15 years from that point. So when it comes to thinking about doing something so far in the future, just like Dave was saying, it really doesn't matter in this situation if you're talking about a home equity line, because the rates are adjustable anyway. So whether you did one today and it still lasted until that time, it would be the same. There is that factor, though. Am I going to quit my job 8 years from now, but I need it 10 years from now? Then probably apply for it before you quit your job. Just saying.
Whatever. It's whatever your financial piece is going to be. And also remember that HELOCs can be refinanced. So you can refinance a HELOC, and you can refinance a HELOC into a HE loan, which is a fixed second mortgage. Okay, so you do have some options. But listen, we could probably talk for 8 hours about all this stuff. Yeah. And he's like, we're not doing that. So when you have it, you can do a fixed second. So that might be something you want to look into, right? When markets or rates are shifting downwards, and you may have some fixed debt that you don't want to redo your first mortgage, right? But sometimes when you look at what's called a blended rate, you look at a first mortgage, what the interest rate is, what the second mortgage is, and the rate is. And if your payment overall is higher on doing them separate, then at that time you may want to consider just doing a straight up cash out refinance on your property. But a lot of people are so laser focused on the interest rate, they kind of forget what's going on the outside around them, so they can put themselves in a better financial position.
I think this really bears credence to you don't know what you don't know. And so you can contact David. You'll see in the description, you can make a meeting with him right now, right? They can do that before I say it. Yes. Okay.
Yeah, it's in the
description. We're live. That's right. I can't edit that part out. Yes, in the description, you'll be able to schedule a meeting with David for whatever question you have, especially if it's very, very specific. I like how you said financial piece, right? Because what works for Jason may not work for me. What works for both of us may not work for, the 500 plus people watching this right now. So it's definitely individual. Going on to Joseph Quintana. I'm sorry if I said that wrong. It says, got my house last year at 675, bad loan. Should I do a IRRL refinance now or wait a little longer? Now I understand there's a financial piece here that's very specific to this person. So we'll have to give very general advice here.
Yeah. So
just schedule a meeting with David.
My go-to on that one is schedule a meeting, because it sounds like it would make sense in this situation. But when we look at the finances, again, everyone's picture is going to be a little bit different. If your loan balance is $100,000, it may not make sense, because the savings are going to be small, right? So it's based on loan size, because sometimes people will call me like, I got a 8% interest rate, should I refinance? We look at the savings and the cost of it. We're like, you may not be saving much, right? So it's going to depend on that, and then also your financial picture, because remember, the rates that are published are for the top tier credit ratings, right? That's when you look at the Prime Mortgage Market Survey that's done by Freddie Mac, Mortgage News Daily, they're normally doing the top, and we don't know what the credit score are. We know that they're using the top tier, but we don't know what the down payments are on these. None of that information. So I would say definitely reach out. At least we could take a look at it, and if it makes sense, we'll explain it. If it doesn't, we're going to show you the numbers that it doesn't.
Yeah. Looking at a 675, I mean, you would almost assume that they bought more recently,
right?
After COVID, at least at a 675,
for sure,
right? Because your pre-COVID and COVID times, at least the beginning, really saw that 3 and below. That was the sweet spot. After that, we just kind of blew up, and now people are buying toilet paper off the shelves at a rapid rate. So that's where we're at, right? That's the assumption, though. So it definitely depends. Definitely reach out to David. Yeah, go ahead.
Yeah, that first one there, that one. Right, this is a common one that we get from the veteran community. And to this date, I'll have people that call me and said, my lender told me I can't have 2 VA loans. I had to sell my other property. And I've had that happen very recently with somebody. So when you have a VA home loan, you can rent that property out with a VA home loan. And as long as you either have enough entitlement or enough down payment to use the VA home loan again. So I'm going to explain 2 parts. One, if you don't have an outstanding VA loan, no limit as long as you're eligible and qualified. So no VA loan, you want to buy a $2 million house, no money down, all the power to you. If you have a VA loan and you want to use it again, then there's going to be a limit on your entitlement, which is the old rules, which is that Fannie Mae single family loan limit. So an easy example. If you're in, let's say, not Virginia because it's high limit, but let's just say you're in Chicago where the limit's $766,550. You buy a house for $266,550. That gives you $500,000 left in entitlement. On that $500,000, you could buy a house with no money down up to $500,000. If you buy another place for $200,000, you can have another third VA loan for $300,000 with no money down, right? And then at that point, you've exhausted all your benefits. So any money over that amount requires a 25% down payment. So first example, you buy a place for $500,000, you have $500,000 left in entitlement. You want to buy a $600,000 property, you have to do a $25,000 down payment because it's based on that $100,000. And if you exhaust all your entitlement, it's a 25% down payment. And a cool thing I've seen somebody with 4 VA home loans because they refinanced their conventional loan into a VA loan with 0 entitlement. The underwriter was like, I don't even know what this means. I'm like, trust me, we can do it. But yeah, so that's kind of one of the cool pieces to it.
You know what's cool is I knew that because we just had a conversation about that. I knew that one. Jason, I knew that one. Okay, we have another donation from Platoon Daddy. All right, I will say your name over and over again. That's what it takes. So just want to say thanks for all the information. You're very welcome, dude. Thank you for donating. I don't know whose channel that is to, but it's all the same. And I love all my veteran brothers.
It's not
sisters.
all the same, Clay.
Yeah.
It's not all the same, just so you know.
Let's pass that Major Richard Starr Act. Because of the donation, I do feel like Jason and I should at least comment on that. Yes, I'm going to put it in kind of a 1 sentence, and Jason, you can expand upon that. Basically, medically retired, so outside of discharge, medically retired, having those benefits not take away from your VA disability. There's a tax factor in there because your VA disability is not taxed. Jason, what do you have to add to that?
You know, yeah, I mean, we don't want to make this into that video, but I think that there's some misperceptions out there. It's specifically medically retired individuals who is targeted in this piece of legislation, the Major Richard Starr Act, who actually passed away before this thing could come to fruition. His wife is helping to champion this legislation. And it's, again, specifically to those that are medically retired. Obviously, they were pushing for 20 plus years and got forced out due to an injury. We all know that person or know of those situations. This is not for medically discharged individuals. Different bucket. You just get to go try to get your VA compensation. What happens here is if you are medically retired, you cannot collect both your VA disability compensation and your medical retirement pay. You can't receive both. It's just an offset, and it sucks and it's wrong. So if you think, look, it doesn't affect me, right? It doesn't change my life at all, whether it passes or not. But I support my brothers and sisters who were trying to put in 20 plus years. I've reached out to my congressional members, both on the House and the Senate side. And if you believe in that's an injustice, then my ask is to do that as well. Reach out to your congressional members on the House and Senate side and tell them that they need to get on this and get that to pass. All right, back to you, Clay.
Yeah, totally agree. Can we answer this one?
Yeah,
right here?
this one. Yeah, that's a good one.
You want to answer that?
Yeah.
Okay.
Let's say that.
I had to ask.
Yeah. No, this one is a really good question. And I've been really doing some videos around this. So question is that, is it better to go through the VA or a company like Veterans United Home Loans? One, the VA does not do VA home loans. Only caveat for that one person out there is for Native American veterans buying on trust lands. That's the only time the VA does the mortgage, right? Otherwise, the VA does not set interest rates. They do not set fees. And the comment I'll make to you is that I promise you, if you reach out to me, you're going to at least get a lot of good information. And we are very competitive with our rates. I'll just leave it at that because I know there's
there's a lot of things.
There's a lot of pieces to that.
You know, I'll say something because I think I'm allowed to. You know, would I do my claim myself and use an accredited rep and put myself in the best place possible to receive all my benefits? That answer is yes, I would. Would I go through someone else who's going to charge me $1,000? That answer is no, I wouldn't. I can say that.
Yeah, you can
right?
say that. I mean, listen,
that.
if you're getting marketed to all the time, remember, someone's got to
Wait a minute. Say it ain't so, David. Say it ain't so. Right? It's kind of like when you go into the casino and it's like a mansion, right?
Yeah.
Gold plated things. The bathroom's nicer than your whole house.
I
think
actually
the
I like
house
that
is,
analogy.
winning.
Yeah, I like that analogy. Like, yeah, going to a casino, they're taking your money.
You know, the MGM's right up the road.
Is
it's
it?
like a 10-minute drive from here.
Jason, you want to fly down?
Right? Yeah. Sure. I'll bring my credit
Stan.
cards. I'll bring my credit cards, and then I'll refinance my loan later and pay them all off.
There we go. Nice. All right.
That was ironic. That was a joke. Do not do that, people. That was a joke.
I'm just trying to double my check. That's all.
I get it. I love it.
You're only a loser if you don't win. Remember that. Okay, so George
I love that. I'm going to take that. Love it.
says, the home equity loan interest rate is still higher than my mortgage. Would one that has under 3% interest rate on a home mortgage loan get a higher interest rate with a home equity loan?
All right, I understand the question. So this is the challenge. You can't refinance and get a 3%. Let's just be honest. Okay. So the second mortgage is there to help fill that gap if you need money. And I mentioned something earlier is that you have to look at the blended amount. If your interest rate is at 2.5 and you have $100,000 balance and you get a 10% second mortgage that's $200,000, I have a sneaky feeling that it's better just to refinance the whole thing into one.
Yeah.
Right? Sneaky feeling that that's what it would be. So you're really looking at those numbers. The HELOCs are higher risk loans for two reasons. One, it's in second position, right? So if something were to happen to your property, the first lien holder gets paid off first and then the second one. So when that 2008, 2009 happened, there was a lot of second mortgages out there that kind of completely belly up. So that's one of the main factors. It's going to be the risk class, and it's going to be that it's in a second position.
There was a question here on VA disability that definitely piqued my interest from Mr. Vic Terry here. Says, would you recommend tackling P&T first before using the VA home loan? Because that would be a very substantial amount of money.
It would.
That I assume the lender will look at and say, ooh, money, right? So would you recommend to tackling P&T first? And let's just take P&T out. I'm just going to say be properly rated.
Right.
Whether that's 80, 90, could be 50%, who knows, right? Is that a cost, or would you recommend them tackling that first? And I have a second question on top of that is, do lenders account for the no cost a veteran has because they use VA healthcare? Like, is that factored in at all?
The VA
or is that
healthcare?
just an arbitrary number that doesn't exist?
I'm not sure on that one.
Right. So instead of having private insurance,
I
use
got
VA
you.
healthcare.
Yeah, that they don't factor
Okay.
that into this. Okay, so this is a question that is really up to your financial position, and let me explain that. If I need the VA disability to qualify for a VA home loan, then I'm going to be waiting for that process to happen. If I currently could afford the property with my current income and I'm waiting for my disability to come through, whatever those property tax benefits may be, or you getting that additional income is really going to be up to you. Sometimes it's a combination. You may have a good income. You may be in a position where you may have a lot of debt, and you can get back pay off your debt, increase your credit score, and put yourself in an overall better position. Then you wait, right? Because you don't want to overextend yourself for buying. You don't want to be house poor, right? Because the VA loan,
yeah, that's a good point.
the VA loan is is a phenomenal product, but they give you so much wiggle room because they primarily look at residual income if you're a veteran, National Guard member, or reserve member. But if you're active duty, they do. We normally see it capped at 55% DTI. Okay, but for a regular veteran, like if you're a single veteran, based on the like Midwest being single, it's like less than $500 of net income you need to qualify. I don't think that's a good position to be in, right? So just make sure that whatever a lender is giving you, if they give you a pre-approval for more than what you wanted, that's cool because you can always go way less. It's anything at really that amount or less. And now caveat with, you're never really pre-approved for a purchase price. You're pre-approved for a mortgage payment. So focus in on the payment and what it costs because taxes vary widely, especially if you look at condos, the HOA fees vary widely. And then compare condo costs against single family homes because of those HOA dues, right? So,
something that Jason and I have talked about a lot, especially recently, and I'm a huge fan. And if I had advice for my younger self, not that I would listen to him because I'm super stubborn and that's an understatement, is to live within your means.
Right.
And I'm just going to break down what David was explaining, right? Let's say you're working full time in your PNT, which is really good to be in a good place financially. If I went back in time, I think I would have purchased a home on my income only and not even included the PNT or the disability rating because that's all on top, right? Because I know I can afford the home, but now if my car breaks down or whatever the heck happens, or I'm paying off debt, now I'm not living paycheck to paycheck. And so when you buy a home that you can afford up to that cap, that means you're living paycheck to paycheck. That's what that translates to on what you can afford. And so I'm glad you brought that up because it is a huge piece for veterans. And there's a lot of stress that comes with that. I want to Mr. Vic Terry here, if you're asking you want a bigger house due to your PNC, that maybe, I don't know your situation,
right,
but that might not be the course of action you want to go down because now you're just living paycheck to paycheck. You can make 10 grand a month and spend 10 grand a month. That's
right,
still paycheck to paycheck if you were making 2 grand a month, right? And spending 2 grand a month. So food for thought. Everyone's situation is different, obviously.
for sure.
I also wouldn't take advice from a guy who does YouTube videos in his basement either. So
I mean, well, that's
right,
debatable. And the funny thing, Clay, you mentioned that there's different schools of thought.
Yeah.
A lot of people I talk to will be like, my mortgage payment can't be more than my VA disability. Because that way, if anything ever happens to me, I could always make my payments. And that is, because, for some people, if you're 100% PNT, they can have a house and a car and it's all paid for.
Mm-hmm.
And so basically they have discretionary income past that. But like you mentioned, it's all about managing that money.
Yeah, you have
right.
to.
That's going to be the big key to that.
You're going to get Capital One cards in the mail saying you qualify for all these things, right?
Look, it's an individual thing, absolutely, and I'm going to kind of throw on a different scenario than those, since Clay likes to be doom and gloom. I'll go the other way. So look, the reality is that you could look at it like this: house prices have traditionally, over time, continuously moved upward. Right now, granted, there's this going on in between, but the overall, a house 20 years ago was worth less than it is today. So if I need to wait, for example, 20 years to get my PNT because I'm going back and forth with the VA 1,000 times, now I've lost out on that much value of the home, right? Because we all know COLA doesn't adjust exactly the same as all the other factors. So an idea could be, I'm going to buy what I can today. Now, again, filled with nuance, right? I'm a financially sound person. I don't do frivolous things. I'm very meticulous. I know what my budget is, and I run my household that way. We'll take that person instead of the one that's going to the casino. So they may purchase a home today with the idea that I don't love the house that I'm buying. I don't love it, but it's an investment. It's an investment, and hopefully in 5 years, that house will gain value a little bit. And oh, by the way, once I get my 100%, hopefully in 5 years, I'm going to turn this home into a rental property, and I'm going to move into my new home since I have 17 kids. So I need a bigger house for my 17 kids, right? So that could be an option for somebody. It's an individual thing. You need to figure you out. The one thing you said, Clay, that you double tapped that Dave said, now I got to say it, is know you. Know your situation. If everything you buy is super expensive because you're buying the highest quality of everything, you're buying cassava flour and almond flour and arrowroot flour and all of these things to make your food, and you're buying the 100% grass-fed organic, and you know that that's not going to change, figure out your spending bills, right? Figure out how much you spend on life, because the lender's not going to do that for you. The lender's not going to figure out how much you spend on X, Y, and Z. They're just taking a national average with they're comfortable with. You figure you out, back into what's left, and whatever's left, that's what you can spend on your monthly basis for your mortgage. And I love how you say this, David. And in my 12 years of lending that I did, and I know you got me beat, but in my 12 years of lending, I've never, ever, ever said it the way you said it, and I absolutely love it, which is you're qualifying for a payment, not a value, right? You're qualifying for how much you can afford payment-wise, not house-wise, because that can change, right? So I love that. So anyway, back to you, Clay. I had to give somebody some sort of an idea on how they could now own 2 homes in a 5-year period instead of don't do anything and live in a shoebox. All right.
Yeah. Well, debt-free, though, would be the plan, right? Let's go ahead and call it 3 more questions. Jason, does that work for you? And then
Yeah,
we'll
I'm
randomly
good.
select 3 questions. Okay.
Yes, sir.
Let's go with, can you answer this one down here? Do you see that one?
Yeah.
Is that a skip?
No, you can put that up.
Okay.
Yeah, so somebody had a question. I got pre-approved with Vets United. Should I cancel? Looking for a condo in Tampa. Currently own my home, but it's not a VA loan. It's conventional. So I definitely say go in the description, schedule a call with me. I know a ton about condos and VA home loans. Jason and I did a whole video on VA condo approvals and what that looks like. And even if a condo is VA approved, it's actually not that great in a way, because they don't actually provide any additional financial information to the VA to recertify that building. So I would say that, 1, we're very competitive with our pricing, and I'd be happy to help. 2, when it comes to the condo itself, I teach a whole condo financing course around condominiums, so be able to help you walk you through that. And one thing to this is that sometimes people feel that when they get under contract with somebody and they're with a certain lending institution, they don't always look at their fees, which you should, right? Especially with some of the with companies that are out there. Review that, and you can reach out to someone else and change lending institutions. Like, we have that happen actually more often than I would like, but I also love it because we want to help people save money. You technically have a lender needs a minimum of 7 days to close on a purchase. Okay, 7 business days. That's a legal requirement. So if you're like 2 weeks out from closing, you have the appraisal done, you're like, wait a second, I watched this video. I want, David, take a look at what my situation is and can they do better? Happy to do so. Happy to look at it, because if we could save you money, we'll do that. Because I'll give you an example. Recently, thanks to one of the viewers, we were able to save him $8,000 in fees for same, or actually lower rate, ironically. So just kind of be careful with that. And that's why you have to read those documents. Don't blank sign them and be like, oh, I trust this person. Because if they're not explaining the documents to you, there might be a problem.
Oh my gosh, Jason, I don't even want to, I can't believe you said that last statement, because it just makes my mind go one direction, but I'm not going to go there. Thank you for that. Okay. Let's look at Michael Touche's. I think that's how you say that. What is the credit score needed to apply for a VA home loan? I'm sure that's a super specific question.
Right.
I see some person stating that the VA does not have a score requirement. He was at 90% VA compensation, now at 80, and they've removed their migraine rating. I have a question on the removal. Was it removal of service connection because of a mistake, or you're talking about a reduction so you're still service connected in 0%, which would be a lot better because you could not easily, but you need the evidence to submit that increase. That's a different ball game other than service connection. So keep that in mind, but that's not this video. Go ahead.
All right. So the VA does not have a minimum credit score requirement. That is true. Now, lenders do have typically will have what's called an overlay. So just think about being in the military. If let's say I'm gonna use the Army here. So let's say the Army says this is the guidelines set out. And your unit's like, well, we can't have these privates going out by themselves to these clubs. That's an overlay, right? Hey, this is the SOP, but we're saying we're going to change that SOP to what we feel comfortable with the risk. Same thing that lenders do. Now, there's lenders that go out there and say, like, we adhere to the VA requirements. You don't need a credit score. But this is the challenge, and this is super real. The VA also has requirements for what your financial picture should look like. You should be looking at 12 months of showing ability to make payments on time. And typically, when we look at blemished credit, you can say, no, it's either one of two things. It's an isolated event. This happened once. In the last 6 months, I had a collection. I paid it off. It was $100. I didn't realize it because I had a speeding ticket. That's going to be looked at differently is if you haven't made payments on 8 of your credit cards and you're in currently in 3 collections and you're currently past due on a payment. That's going to be looked at very differently because they're looking at what your ability to repay the loan is the primary factor. Because if 2 years ago you had a cluster of lates because you lost your job, you had a death in the family, you didn't work, that's something you can explain.
Mm-hmm.
But, late on all 3 credit cards being past due, how are you going to be able to explain that plus being a homeowner?
Yeah, and the last question, okay, and then we'll go ahead and do some closing statements here from Easy Rollins. Rollins says, "Can I use my VA home loan if I own my home already?" I'm going to assume
paid off.
I don't and bought it with the first-time home buyers. Let's assume that it's not paid off because it's a loan, right? So you
I'm going to go both ways because
Okay.
this is important to know because it is a technicality a lot of veterans miss. So remember, we talked a little bit earlier is that you can have multiple VA home loans at the same time. Normally, you can't just like, hey, I'm buying 2 houses at once with a VA home loan. This is like, hey, I bought a home, I have enough entitlement, or I have the money to do a down payment like we talked about earlier. You can use the VA loan. It's unlimited. I have somebody with 4 of them. So it's definitely possible. Caveat is if you paid off your house, this is a broader topic, is that if you started with a $500,000, you purchased the house for $500,000, you got the loan for $500,000. That balance today is $300,000. Your entitlement that you've locked out is $500,000. Even if you paid it off to 0, you still have locked in $500,000 of your entitlement. The only way you can restore it is if you transfer the property to somebody else or like an LLC out of your name, so then you can show the VA, hey, I don't owe this anymore, restore my benefits, or you do a once-in-a-lifetime restoration of your benefits. That's where the misconception comes from. You can only use the VA loan once.
All right. I mean, well, thank you for coming, especially to the house.
Yeah,
right?
no, I appreciate it.
Definitely, it probably saves my bandwidth a little bit, a little more versus than hosting three different streams. Thank you for everything, David. Can you go ahead and tell the veterans, the viewers, how they can contact you?
Yeah, so you guys can check out VA Housing Education on YouTube. Check out the channel. I do a bunch of videos on the VA home loan. We do updates. We do collaborations like this. And also in the description, you guys could schedule a call with me as well. And, happy to help. You'll actually talk to me because people will be like, wait a second, like the guy in the video? Yes, you're going to actually talk to me. We're going to go through what your picture looks like and just, give you the best advice that we can to put you in the best financial position.
Yep. Jason, anything? You're muted.
You're muted.
Heck yeah, I am. Look, here's the bottom line. All lenders are not created equal. They all, like David was saying, all have different overlays, right, on what they do. And they can only be stricter than what the VA requires. It can't be less than. So great idea that if you're in the process and it's not with David, have that conversation with David, somebody that you know and trust, somebody that we know and trust, somebody who's looking after us. Just wanted to throw that out there.
Mm-hmm.
And look, if you're just on this live, just watching and caught the tail end, I suggest you watch from the beginning if this is something that you are interested in. This will be posting up on all the different channels here momentarily as we're wrapping it up. So you can just jump on and watch it from the beginning. Great information. David's great. Thank you for coming on with us, David. We really appreciate it. And again, I love that you guys are so close. It's
Yes.
I've
If
taken
we're not helping each other or something, we're doing something wrong.
You're right. Yes. If look, here's the end, right? And because Clay has his memory is about 4 words long. I can't speak or read, and together we somehow get things done.
And I have a stutter, and we have a joint channel.
And tinnitus on your shirt. I mean, gosh. Yeah, somebody should buy that. All right. So with that, thank you so much for watching. We really appreciate you. Hit that thumbs up. And remember, if we don't take care of each other, something went wrong.
Yep. And thank you very much. I did catch that last-minute donation for answering that question. Thank you very much.
Last minute. Look, that's how they keep us on. That was messed up. Hey, thank you.
Thanks, guys.
All right.